Morning guys, Keith here, and in this video we're going to be discussing distribution phases. How do we understand when a top's in on the market and what signals can we look out for? This is what whales do at the top. So on this important topic today, we're looking at distribution phases of a market. How do we know when the market tops in? So we're looking for 4 clues. We're looking for euphoria. We're looking for a slowdown of momentum. We're looking for failed breakouts. And finally, we're looking for breakdowns. Because one thing that you need to think of is if a whale has a high allocation of an asset, in this example, Bitcoin, what would happen if he sold all of his capital at the top? Price would slam down. He would get less. He would get less. He would get less. So one thing that whales do, people that have got a high allocation of something, they distribute and distribute out. So what is distribution? Distribution is part allocating out of the market and then allowing buyers to step in because the market's euphoric. It'll allow buyers to step in and buyers to step in, and when buyers step in, they can sell another allocation, and buyers step in another allocation. So we see it with accumulation at bottoms. People accumulate their position. If a whale bought a high amount of an allocation while it was in an accumulation phase, what would happen? Price would go up. He wouldn't get it as cheap. So he has to part buy, part buy, part buy. And it's exactly the same with distribution. Part sell, part sell, part sell. So they can't sell it all at once. Otherwise, they're not going to get a good enough price. So they have to do it over a period of time. And when that happens, the market is in a euphoric phase. So a euphoric phase is when the market's hyped, retailer in the market, the news is good, everything is pushing the market to the upside, and it looks like momentum is not slowing down. So that's what we look for, is a euphoric market during a distribution phase. That means that the whales can part sell, part sell, part sell, because they know that the buy orders and buy orders are going to be matched. So the next one, so momentum slowing. Momentum slowing, we understand that we keep putting in highs and highs and higher lows. So if momentum's slowing, we're barely putting in new highs. We're not managing to hold the highs. And that brings us to the third one, which is failed breakouts. So we get pushes to the upside, and sometimes it does break out, but that breakout can't be sustained. And we look at the indicators in conjunction with price action to try and identify whether something is changing in the market. Getting failed breakouts, they're failing to hold. And then ultimately it ends with this, a breakdown. So we're going to go through the different phases of the distribution cycle, and understanding when a distribution cycle's in helps you understand one thing: when whales are selling the market. While we're discussing the topic of education, you can join Crypto School for $99 a month. It is one of the best platforms in the world for crypto education. It's got over 40 structured hours of course material. It's got exclusive insights by some of the biggest players. You're going to hear these names. You would have heard these names before: Tyler Hill, Connor Kenny. And we've got live trading rooms with a private community of over 1,000 investors, all like-minded investors looking at the same thing that you're looking at. So back to the charts. We're going to go through different cycles. We're going to go through the previous couple of cycles and see if we can identify whether the market was euphoric, whether momentum was slowing, whether we've got failed breakouts, and ultimately it ends in the breakdown. So if we go in the 2025 bull market, one thing that you can see is as we started pushing up, we started pushing up, pushing up, pushing up. We got to this point here. We'd put in a new high, and then the distribution started. So on this, for this example, I've zoomed out. You've got to understand that each one of these candles is 1 week. So this doesn't look like a long period of time, but during this period of time, a few weeks, a couple of months, we've pushed up, we've pushed up, we've failed to break out. We've pulled back, we've pulled back. We've pushed up, we've pushed up, we've failed to break out. And then that ends with, after a failed breakout, the breakdown. So that's exactly what happened in 2025. We're going to look at some of the markets. We're going to look back at 2021, the 2021 bull market, and see if we could identify euphoria, momentum slowing, failed breakouts, and then ultimately the breakdown. But you can see here, guys, we had a failed rally, we had a double top, we pulled back down, and then they pushed up. They didn't manage to breach a new high, they didn't manage to sustain it. That was followed by a breakdown. Right, so the psychology behind this, what have we got? We've got a new high. We've got whales, which know that the market's euphoric, know that the market's overheated. They're selling, part selling, that is, part selling, part selling. Then what happens? We get another push to the upside. What are the whales doing? Selling everything? No. What would happen if they sold everything? Bam, to the downside. And they would accumulate down here, down here, down here, down here. The market is euphoric. They want to be taken from retail. So they're waiting for the push up, and then they can part sell, and then they can part sell until their allocation is gone. So this period of time, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks. doesn't look much. That was 12 weeks of euphoric accumulation, a distribution. Right, we're going to do the same. We're going to go to the 2021 bull market. So with the 2021 bull market, exactly the same happened. We had a big pullback. Everybody knows the May 2021 capitulation. May 2021 capitulation lost Bitcoin over 50% of its capital. Then we had a slowdown, and then we had another push to the upside. So there was lots going on here. We had two distribution phases. We had two breakdowns. You can see you're getting failed breakouts. It's coming back down, failed, bam, to the downside, you get a breakdown. So this is the second leg of the market push up. This was September, October, November, the crash. And you can see exactly the same thing happens here. You've got 1, 2, 3, 4, 5, 6 weeks of distribution before you get the breakdown. During this point here, we are definitely euphoric. During this point here, we are definitely euphoric. The market's got a lot of hype at this point, and everybody thinks that they're making lots of money. So just take a step back and understand one thing that you need for a trend, a directional bias, is higher highs and higher lows. We need to maintain one thing, that structure. If you get a failed breakup and you get a distribution phase where you're just being toppy and distributing and distributing and distributing over a long period of time at the top, then you've got to expect that the market is losing steam. The market's losing steam here. We understood that. And we got the breakdown. We got the breakdown. So interesting enough, guys, we're actually testing on Bitcoin the 200 weekly, big 200 weekly moving average as we speak. So that's going to be an interesting one to watch, 62,638 as we speak. Let's hope that holds us support. Right, okay, take care of yourself. I'll see you all very soon.